Good afternoon, and thank you for joining us today. My name is Andrew Kipe, and I'm with Red Cloud Securities. Today's webinar focuses on Agnico Eagle, and it gives me great pleasure to introduce David Smith, who is the Senior Vice President of Finance and also the CFO of Agnico.
Thanks, Andrew. It's a real pleasure to be here.
Yeah, thank you very much. Look, we're going to start off with a presentation, and David is going to run through the key aspects of Agnico and where the company is on its various project development stages, as well as bedding down a lot of growth that has taken place in the company over the last 2 years. But before we do that, I'd like to first point out that Agnico Eagle has its disclosures on page 2 of the presentation, and I do encourage people to look at those. From a Red Cloud Securities perspective, I would highlight that this is a webinar is for information purposes only and should not be considered as solicitation to purchase or sell securities or a recommendation to buy or sell securities. And we note that this call does not take into account the particular situations or needs of individual investors. Participants should rely on their own investigative work and seek their own professional advice before making an investment. Please see our most recent research located on a number of companies, as well as high-level looks at the sector, particularly from a precious metal perspective. So look, I'm going to turn this over to David. It's very much his presentation, and it gives us great pleasure to have Agnico on our platform today.
Great. Well, thank you again, Andrew, and to all of the Red Cloud folk. It's a real pleasure to be here, and I hope everybody is safe and happy and doing well. Obviously, some difficult times. I'm sure everyone's making the best of it as we are at Agnico. So, as Andrew said, just jumping right in, there are forward-looking statements. In fact, our earnings come out at the end of this month, so I will probably be making even fewer forward-looking statements than I would normally make, but please pay attention to the notes and the forward-looking statements. Very important. So those of you that do know the company know that Agnico's been around for a long time. It remains our goal to continue with our long-term sustainable self-funding business. The self-funding part is somewhat new. We did come through the largest growth phase in the company's history. Just recently, in the last couple of years, we spent a couple of $1 billion building a couple of new gold mines in the Canadian Arctic. But going on from here, especially literally right from now, being the second half of 2020, we should be in a situation where we're running into a lot of net free cash flow. And really, our goal is to be a self-funding business going on from here. One of the hallmarks of Agnico is that we have really been very stingy, if you will, with the shares over the years. We're very proud of a lot of per share metrics, and I'll talk about that a little bit in the presentation. But just kind of starting off, Q1, quite obviously, right at the end of the quarter, very impacted. Agnico, in fact, had 7 of its 8 operating mines were shut down due to government regulations and obviously for concern of the safety of the employees. All the mines are back up and running now. But again, number one concern, as always, is the safety of the employees. No difference there. Normally, we just don't have to shut the mines down to make sure that people are safe. That being said, should be a really great second half of the year for us, and I look forward to telling you why. So I'm sure everybody wants to know what happened. What did Agnico do? Again, 7 of the 8 mines shut down. We very quickly moved to send our Inuit workforce home. Of course, due to the remote nature of the properties in the Arctic and fewer medical facilities immediately available, it was absolutely critical that we didn't let the coronavirus get into those northern communities. And so we've actually been very successful in that. There have been no cases in the Inuit communities. That's fantastic. We have now had some cases at the other mines. The first one was at Kittilä in Finland. Thankfully, that employee, the first one, is actually back at work and healthy, and that's great. There are some cases down in Mexico. I think in total by this point, we're probably around 20 cases, I think in total, maybe one or two more than that. But that's out of, including contractors, about 10,000 employees. So I think the measures that we have taken have really worked. And as I said earlier, we're now back up and running, which is fantastic. I'm not going to talk too much about the first quarter highlights, because we're now really right at the end of the second quarter and getting ready to report at the end of the month. But it is worth noting that as a result of the virus, we had to withdraw guidance from the original guidance in February, and you can see that on this slide. The withdrawn 2020 guidance and the new guidance, slightly lower level, and because of partly due to the costs of this, but also partly literally just to producing less gold, slightly higher cost per ounce expected as well. But all of these are really first half related, and as I said, we're expecting a really good second half, knock on wood. The virus itself, if there was a silver lining, I guess it was that we were able to take that period of care and maintenance and actually work on some of the issues that we'd had, that we talked about in Q1 and in February. We had some seismicity at LaRonde. That's not new, of course. That mine's been operating since 1988, and it's been a deep mine for a long time. But we decided to be more conservative and go more slowly in the west mine area at LaRonde. So we were able to take this period of time that the mine was shut down on care and maintenance and actually do the care and maintenance and go back into these areas, do the rehab that was required, get some lateral development done. And we're actually expecting LaRonde it is back up and running, and we're expecting it to have a great second half of the year. At the adjacent LaRonde Zone 5, we're actually planning to get more tons out of that to keep the LaRonde mill full, and fewer tons from LaRonde Deep, but effectively keeping the mill full with just going a little bit more slowly in the deep area on the west, which I refer to as the crown jewels at LaRonde. It's the highest grade and the highest value ore on the property, but just be conservative with the crown jewels, I think, is probably a pretty good strategy. We had a failure at an apron feeder at Meliadine that we had talked about. We used this period to repair that. It's back up and running, has a full spare, actually running better than ever, I would say. And then at Amaruq as well, a lot of same thing, care and maintenance. We had some issues with the truck fleet, and so we're back up there and running. A little bit lower gold production, of course, as I said earlier, than we expected, but that is to be understood because of the virus. But we're really excited where we are today, and as I keep saying, you're going to see a good second half for the company, and we do still expect to generate very strong net free cash flow. Exploration was another area that was shut down by the governments. We actually had to stop drilling all over the place, and that's all back up and running now as well. Actually just got off a call a couple of minutes ago where Guy, our SVP of Exploration, was talking about the program for the remainder of the year. They're going to try and catch up as much as they can on that, but I'm not sure they're really going to be able to spend the originally budgeted dollars. But again, to be understood considering the severity of the situation. And of course, going forward at the mines and in exploration, and of course in all of the offices, we're having to be more careful with social distancing, etc., testing, and just making sure that the entire workforce can work efficiently, but also stay safe and healthy. As I said, LaRonde, one of the crown jewels. This property continues to do very well. We're back mining in the west area. You can see on this graphic, one of the reasons we put this graphic up is just to show off some of the drill holes at the bottom of this deposit. We've got 22 grams per ton over 5 meters. We've got 8 grams per ton over 8 meters. Seems like it's getting thicker and richer as we go deeper in the deposit. I don't expect that the deposit's actually going to peter out. I'm fairly certain it goes through the center of the earth and out the other side, but I guess we'll never figure that out. But it's really the company builder asset, and there's a great future in front of it. And to that point, the red boxes that we've drawn on this graphic are really showing the areas of focus. So the old Bousquet, Ellison, the Terex properties, and even some undrilled properties beneath Bousquet and the original LaRonde Zone 11-3 are looking really interesting. We've run into an old zinc zone as well that was present in the upper levels, and we're now running into that again. So lots of opportunity around LaRonde, and of course the whole Abitibi continues to be a great region for us. On that note, this graphic is a longitudinal section through the Malartic pit, which is the yellowish bit at surface to the left of the screen. What we're really focusing now from an action perspective is what is east of Malartic. And east of Malartic is looking really quite interesting. It's early days, it's exploration, but the East Goldie Zone, the Odyssey Zone, the East Malartic Underground Zone are all looking quite interesting, and we'll be applying some exploration dollars here as well. Some really great results. To give you a frame of reference, the Malartic pit itself is about 1 gram per ton. And then, especially at East Goldie, we're hitting 2, 3, 4 grams per ton over pretty significant thicknesses. There's even some intersections that are higher grade than that. So we've got a great opportunity there over time to extend the life of this deposit. It will require some capital, of course, because I think it's all going to be underground. So ramp development, possibly a shaft, we'll see. We're still drilling it off with our partner, Yamana Gold. Santa Gertrudis is a new property in northern Mexico in the Sonora state, where we already operate our La India mine. Pretty interesting, lots of different deposits on this property that we're following up on, but Mexico is certainly an area where we would like to continue to operate, certainly, but also to build new mines. We're on a corporate development call yesterday, and a lot of what we talked about was around Mexico. It's still a really interesting area for us, and we are hoping to be getting into some more mine building there as well in the future. Just looking back, I don't want to dwell on Q1 results, but the reason I wanted to put this slide up again was just to remind people that Agnico remains a very well-diversified company. We're one of the larger producers out there. We'll be around 2 million ounces of gold production next year. But if you look at the pie graph on the right, you'll see that there's not one mine that produces most of the gold. So we are well diversified operationally. That being said, we're not very well diversified by metal. We're obviously predominantly a gold mining company with 97% of the revenue coming from gold. There is still some minor base metal production, copper and zinc from LaRonde, but it is absolutely dwarfed by the gold production of coming up to 2 million ounces per year. A little bit of byproduct silver as well, of course. I always get asked the question on whether or not Agnico is looking at other metals. I think the answer is yes, depending on where it would be, depending what it is. Do we have specific expertise? We're not looking for nickel sulfides in Madagascar, that's for certain. But if there was a copper deposit right beside LaRonde, we'd absolutely have the technical skill to be able to execute that. Top of our list, of course, remains gold deposits, and that's absolutely the focus of what we're doing. But because of LaRonde, we actually call it LaRonde University. We have the technical expertise in copper, zinc, lead, silver, gold, all of these things that we've done for a long period of time. Talking very quickly about the financial position, we were one of the companies, one of the corporates that actually drew on the credit lines when the whole virus crisis began. We drew $1 billion of the 1.2 just to be ultra conservative. We've now repaid 750 million of that. I expect this quarter we'll repay the other 250. That being said, we're holding on to it right now because we are still a little bit nervous about phase 2 of the virus. I don't know how that is going to shape up, so we want to carry a little bit extra cash on the balance sheet beyond what we normally would. To give you, again, a frame of reference, our normal cash balance would be about $100 million minimum. So we're going to hold, I think we're probably around 350 at the moment. So subtract that 250, we're at our normal rate of cash. But again, to be ultra conservative, we're going to hold on to a little bit of extra cash right now, but again, probably repay it this quarter. We had some interesting activity since many of us last spoke, which was we did a new debt issue. We were actually launching it at the end of February and pricing it right as the world was shutting down in the middle of March. We ended up issuing $200 million of notes, 2 series of notes, 10-year and 12-year, and the weighted average interest rate on that was 2.83%. So by far the lowest cost financing in Agnico's history, and we're really proud to get it done. We actually got a credit rating upgrade during that whole process and an inaugural rating from Fitch. So we're a BBB flat credit now, which is fantastic, and we're very pleased about that. Don't have any debt maturities until 2022, when we have 225 million due. At current margins in the business, we should be so awash with cash that we would just pay that out of cash, reduce gross debt. That being said, as I mentioned, we're a BBB rated credit, so there's no requirement to pay down gross debt, but we do want to be conservative with the balance sheet to make sure that we can take advantage of future opportunity. So we'll make our decision over the next year or so on what we're going to do with that upcoming maturity, but it certainly shouldn't be an issue. We'll have lots of opportunity to either take advantage of market conditions or just pay it off in cash. Talking about the gold production forecast, again, little dip this year due to the virus, but to be expected, great growth into next year and 2022 and beyond. Again, the call that I'm just off right now is talking about our key projects and how we're going to advance them. It's almost an embarrassment of riches. We have a lot of great kind of near-term projects, we've got medium-term projects, and we've got long-term projects. So I like to say that I think Agnico can be busy for the next 10 years or so, really without issue. We don't have to do any M&A. It's not like we have a production cliff facing us in the near term. So we have the luxurious position of being able to make sure they're the right things in the right places, make sure that we have great returns on those projects. And if we can't find any M&A, well, so be it. We'll just be busy ourselves on brownfield opportunities that we already have. Most of them are brownfield. There's a few greenfield, but they're all in regions that we already operate in. So I think Agnico is in great shape. It's certainly not a race to produce the most gold, but it's an opportunity that Agnico has to continue to drive production higher. But again, probably not issue a lot of shares in the meantime. Dilution, as you all know, is really an enemy, and Agnico's realized that for a very, very long time. And I can assure you that everything we talk about internally is in fact about per share this, per share that. Just make sure that we're building per share value for the shareholders, making sure that we increase your exposure to the metal on a per share basis. It has to be per share or it doesn't count. So as I say, Agnico is really looking forward to big rise in net free cash flow starting now, second half of 2020. We've drawn a dotted line in for CapEx. I always say I think going forward we'll probably spend something in the neighborhood of $700 million per year on total capital, half of that approximately being sustaining, half of it being growth. I really like that balance because we should be able to push our pipeline forward with that $350-ish million per year and tell people a growth story. Yeah, you know, someday we'll produce 2.5 million ounces, not a race, but I can understand how we could get there by pushing this pipeline forward. So we'll continue to do that. We'll have cash accumulation again starting now, reduce net debt, certainly gross debt, maybe, we'll see. But absolutely one of our priorities is to continue to increase the dividend. Very important, we've paid a dividend for 37 consecutive years. We were forced to cut it back in 2013 when gold went from 1,800 on its way to 1,050. But since then, we've been steadily increasing it back up again. And on an annual rate, we're at 80 cents per share. The highest annual rate was 88 cents per share. And I can clearly see through our cash flow forecast that in fairly short order, we should be at record levels for the dividend per share, which is great. I think the investors are rightly looking to their gold equities right now as you know, big wins, and I think we're going to continue to be big winners, the whole industry. The outlook for gold itself looks incredibly strong, and as I've been saying, I think the outlook for Agnico is just as strong. So record Canadian dollar gold prices coupled with record gold production, 75% of our production comes from Canada, so that weak Canadian dollar helps us out as well. Great situation to be in, and I really hope we get into the slightly comical circumstance of literally not knowing what to do with all the money. It seems like that's the direction we're headed right now. Again, one of the reasons that Agnico's been around for 63 years and why we're hoping to be around for 63 more is we pay a lot of attention to the ESG stuff. We're an award-winning company on that front. We've got a great report on our website, the sustainability report, for people that are interested in digging a little bit deeper. But as I say, we've won a lot of awards. We're recognized from various service providers as one of the best companies out there from that perspective. And we're really proud of that. And I know that's one of the things that is so important to Sean and to the board, is that we do the right thing. That's how Sean says it every time, just do the right thing. And he likes to say we're also blessed with having a lot of, 10,000 employees that understand what that means. And so it's a great situation, and it works. And I think this is the last slide before we'll go to Andrew's questions, but Agnico for a long, long time has not only outperformed gold, we've outperformed the broad markets, and we've blown away the peer index, the XAU. So this is an investment that has worked. We show it since 1998 as a little pat on the back to Sean. That's when he became CEO. So I think if we told Sean that through 2020 the CAGR on the share price would be 13%, I think he'd take 13% per year. And I think most investors have recognized that it's been a high quality company. It's not always the cheapest company, but as people like to say, people will pay for quality and delivery, execution, do the right thing. And that's been Agnico for a long time. So I'll leave it at that. I don't think I need to dig into those appendix slides. Andrew, do you want to go to the questions?
Yeah, definitely. Look, David, you spoke about Agnico's response to COVID-19, and I'm just wondering, you've been having, as a company, you've had to react quickly. I'm just wondering, from an investor standpoint, and what should we expect from the new normal, or as you see it right now? What do you think is going to be temporary, the changes that you've had to make in your business versus which changes do you think are going to be longer term?
Yeah, we were kind of talking about that just before the call started, weren't we? Where I think one of the things that might be changed forever could be the investor relations side of it. I'm not sure there's going to be 30 corporates all standing around in the lobby at Fidelity in Boston again. I'm not sure that people are going to travel the same way they used to. I would expect that perhaps mutual fund managers aren't going to be going to conferences as much. There probably will be fewer conferences. There'll be, well, not fewer, they'll just be online, right? Things like this. I think people are going to go to this. It's kind of nice as well because you can record things like this and you can just watch them when you have time on a weekend or evenings. So I kind of think the investor relations side is going to be different. Obviously, in the near term on the operating front, the social distancing, especially in an underground mine during shift change, is dramatically different. I might be exaggerating, but I think we used to stuff around 40 people into the cage at LaRonde to send them underground for the shift. And now I think we're putting 6 or 8 people in there with dividers and everyone's wearing masks and so on. So we've actually had to stagger shift start and finish to make sure that we can get the people underground that have to go, but they can't obviously all go together like they used to. And I'm not sure when that's going to come back. People might find that they can manage better anyhow. I know that some of the contractors we've talked to that work for Agnico have used this opportunity to realize that they can probably get the job done with fewer people. I think that one of the obvious conclusions is going to be, just like everybody else in the world, I think that we have realized we probably don't need every single person up in the Canadian Arctic that we had in the Canadian Arctic. Some of those people can sit in Montreal or Toronto or Val-d'Or, or it doesn't really matter where they are, right? As long as you have decent communications, then people can work remotely quite successfully. And I know that is the conclusion of virtually every industry in the world, that this has changed the perception of working remotely. And imagine the savings that can be made if you don't fly people back and forth from Nunavut all the time. It's quite clear that just getting food up there for people, heating those buildings in the winter, it's obvious that we can take advantage of the new normal from a communications perspective.
Yeah, definitely. So when you take all of the things that you've just spoken about, there's also been a lot of discussion about how costs are going to be impacted from an operational standpoint. Can you give us a bit of insight on how you think those cost trends are taking place? Clearly, you're benefiting from a weaker currency. You're benefiting from lower fuel input prices, but there's also that cost that you've been talking about social distancing, and I think investors would like to better understand how it's all going to shake out at the end. I mean, with what you're seeing now, what do you think the cost profile is going to be, and where do you think the pressure points are going to be that you need to be concerned about?
Yeah, well, let me just cover the currency and fuel side first. Currency, Canadian dollar specifically, is our second biggest sensitivity after the gold price. That has gone our way quite well. As I said earlier, the Canadian dollar gold price today is near its all-time record high. So that's been great. I've seen a lot of currency forecasts that say the Canadian dollar is actually going to weaken even against a weakening US dollar. I've been around long enough to know that nobody really knows the answers to those things, and we'll just continue with our hedging program as we always have, which is buy the dips in small increments on currency and fuel. And what that does is it helps us gain confidence during the year that we'll be able to do what we said we were going to do, largely on a cost per ounce basis. This year, for example, the Canadian dollar budget and guidance was at 130. we've had tremendous success. Again, a small silver lining through the virus crisis, but we've had great success adding to that currency hedging program. And we're more than 50% hedged for the Canadian dollar exposure, which is more than $2 billion a year to operate those mines. So 1 cent here and there makes a big difference. But we're now more than 50% hedged for this year. And I think we're protecting about 133 and participating. Depends on some of the different instruments, but we're participating all the way up into the 150s under certain instruments. So good result there. But the part of the equation that we don't understand yet, and I don't think we're going to know for a few quarters, is what impact has the social distancing and all the health and safety procedures, what has that had on the efficiency of the operations? I singled out underground mining, where I think it's a lot more obvious, where at least at a few choke points, people are together. Open pit, it's less obvious that there would be much of an impact. I guess you're not going to be jamming people into big lunchrooms together, but I don't think that's a big deal either. A lot of people are used to grabbing a sandwich on a truck as they drive, or sitting in their loader for a few minutes and having a coffee and a bite to eat. I don't think the operational efficiency is going to drop as much as some people might think. And again, you always use these as learning experiences, and we're doing the same and trying to figure out how we can do more with less, where we continue to work on automation. I didn't mention earlier, but our LaRonde Zone 5, the shallow mine adjacent to the deep LaRonde mine, Zone 5 has really turned into our test mine. And we've done a lot of work with automated equipment. We've had now trucks drive up from the bottom of the mine without a driver in the truck. So autonomous, people, obviously sitting on remotes on surface at the ready in case anything goes wrong, but very successful already on automation. We're still working on technologies like ore sorting to just try and be more efficient over time. I'm sure everyone's doing all of those things, but very long answer to the question of, I don't know how or if we're going to be impacted. Is it going to be less efficient? Logically, you would think parts of it, yes, and then other parts of it more efficient. So we'll see where it nets out, but I don't think the industry is going to have a good answer to that really for another year or two, just to get some evidence in the tail lights or the mirror.
As part of the discussion, really the social aspect of running a large mining business is really about that engagement on the social front. And, the COVID-19 experience is really bringing it to the forefront on how you engage your stakeholders and how you, as a company, interact with your stakeholders to have a better outcome. It really talks to the ESG component of running your business. I guess when you think about the increasing demands that are being placed on mining companies about ESG, what do you think some of the near-term trends are going to be, and some of the longer-term trends that you as a company are thinking about? What are your priorities over the next 1 to 2 years versus those longer-term priorities that you need to focus on?
Yeah, I think there's obviously numerous parts to that, E, S, and G, or C, S, and R, whatever you want to call it. Agnico's always been very dedicated to these things, and it's one of the reasons we've had the social license to operate for 63 years. I've seen, even in my 15-year career at Agnico, I've seen more focus than ever on the environmental side. I've seen changes in regulations to discharge water, for example, everything becoming more strict. But we like to say that now with the more recent, more in-depth focus on the ESG stuff, Agnico hasn't really had to do very much differently. It's really been a question of compiling and publishing what we have done in a more formalized report. And that's great. I'm an environmentalist just like everyone else. We all believe that we shouldn't be polluting. We got to take care of the environment. There shouldn't be a lot of damage done to the planet by what we're doing here. And Agnico's had a couple of really interesting opportunities to kind of prove that we are great stewards of the environment. When we built our gold mine, I'm sure you remember this, Andrew, when we built Goldex in Quebec, we actually repaired a Quebec government environmental disaster, frankly, at the Manitou site, just 20K down the road from Goldex, where we went in and said, hey, instead of building a tailings facility at Goldex, why don't we use this existing one? We'll clean it up, we'll take care of it, we'll monitor it, but most importantly, we're going to cap the acid generating material with the inert Goldex tailings. And so that has been an absolutely fantastic success. And right now in the United States, we're actually looking at a similar property in South Dakota. It's called Gilt Edge, and we're drilling that off now and doing some studies. It certainly hasn't been determined whether or not it's economic yet or not, but it is a US Superfund site. And so we're looking at that property and saying, hey, US government, we already had this success in Quebec. If the deposit is economic, wouldn't it be great if we could do the same thing here? So we're really proud of that side of it, and that ability to show people who may be non-believers or skeptical of mining. We're saying, actually, like, there are examples of us making things better, and we're really not making it worse. I go a little bit on a rant on occasion about all the salt in the cities all over Canada, but I live in Toronto, and it just blows my mind when I see all winter, the city dumping salt all over. Where does that salt go? Well, it goes into the sewers and right into Lake Ontario. And I always say, well, if Agnico owned and operated the city of Toronto, we'd have to collect all of that water. We would have to treat it, and by the time it gets discharged, you could be drinking it. So it's kind of interesting how people on occasion will say, mining doesn't have a great reputation. I'm sure most big industry didn't have a great reputation 100 years ago, but things have really changed. And so we welcome this focus on the ESG. The social side of it, that has been nothing new for Agnico. As you know, the company's been around for a long time. And the first CEO, who was there for a very long time, a gentleman named Paul Penna, I think really this is where do the right thing came from. He was a very, very charitable, generous man, and brought that spirit out in Sean as well. I'm sure it was always in there, but Sean's a true believer as well in carrying on that legacy of Paul Penna and making sure that Agnico remains one of the most respected mining companies in the world. But not only that, I think now demonstrating through all the CSR, ESG, winning all these awards, not just in mining, but in any industry, we're now demonstrating that, mining can be a very responsible industry. And I've always believed that because I've been in the industry my whole life, but I have run into the odd skeptic, and I'm really happy that we now have the opportunity to talk more about it and that people are listening.
That's great. No, good insight. Thank you very much. You brought up exploration, and this is very much an exploration-focused group. So I've got a couple of questions. I mean, first of all, having covered Agnico, you've got a very deep pipeline of opportunities, and you mentioned it. So I guess the first question I have with the organic pipeline that Agnico has is, which projects do you feel are priorities? You've certainly brought up a desire to expand opportunities in Mexico, so it would be interesting to understand that. But in North America and particularly in Canada, which projects in that pipeline are priorities for Agnico currently? And then, thinking about my transition into spending time with Red Cloud and working with Red Cloud, one of the things that has interested me is just there's a lot of good opportunities that are developing in the junior space. There's now getting some money. They're being able to explore. A lot of these companies are on the Red Cloud platform. And how does a company like Agnico think about those exploration opportunities that are beginning to emerge?
Mm-hmm. Well, I imagine the first thing we'll do is buy all of the junior companies that are on the Red Cloud platform. That'd probably be helpful. In all seriousness, it's kind of funny. We are a little bit counter-cyclical, right? Like, we try and do our shopping at the bottom of the market. And here we are now, the juniors are finally, the financing windows are opening a little bit. We've seen some of the market caps double and triple, which is a bit of a shame because, of course, we want to buy low and develop good new gold mines. But we'll continue to look at all of the opportunities, but they're going to be opportunities in regions that we already operate in. We don't have anything in South America operating, but we have been looking around South America for probably 8 or 10 years. Nothing yet. We've made some investments in juniors along the way and sold them sometimes as well. So I wouldn't be surprised someday if we dip our toe a little deeper into South America, but only certain countries, because you need great rule of law, and we're very proud of having a low political risk operating profile. So we'll see, but where we're probably most interested, as I said, is Mexico. There's a lot of junior activity still there. It looks pretty interesting. Canada, the United States. There's a couple of interesting things in Finland. We're actually shareholders of a company called Rupert that operates not too far from the Kittilä mine in Finland. So we shall see where all of this goes. As I say, sometimes we buy, sometimes we sell, but it really is this whole mentality of, buy small, think big, and then develop what we already have on our own properties. So I already mentioned LaRonde. I should mention Goldex, big deposit, fairly low grade underground, but we're tremendously efficient there, and as a result, Goldex works really well, and we know there's a lot more deeper ore there. Nunavut, we've been operating for just over 10 years, but it's still the wild, wild west up there, relatively underexplored. We're by far the largest landowners in terms of prospective property, and I think we're going to be up in Nunavut for decades. One of the things that people forget about sometimes, I believe, is that when we got involved with Comaplex, which it turned into the Meliadine mine, it was 5 million ounces of gold in resource and reserve when we bought it, and we drilled it off quite quickly in a few years to about 10 million ounces. And then we stopped drilling because we said, okay, well, probably time to build a mine here. It doesn't make any difference if we have 20 million. We're not going to, double the size of it. So let's get this thing built and then go back and start drilling again. And it was only about a year and a half ago that we really seriously started doing exploration drilling around Meliadine again. And that deposit is going to grow. We're certain of that. And again, I think we're going to be there for decades. I hadn't mentioned the Amaruq deposit specifically, other than the maintenance on the trucks and so on. But again, brand new deposit that we're just starting to mine now, and has underground potential, has regional potential. And then there's other properties that would be greenfield standalone that we already own. You're well aware of the Kirkland Lake assets just across the border from our properties in Quebec, in Ontario. We're the largest landowner in the Kirkland Lake area. So we believe that the Upper Beaver deposit will be a mine. We think there's great potential at Upper Canada as well. The AK deposit is right beside Kirkland Lake Gold. So there's probably gold in that area too. In fact, we know there is. And then further out west in Ontario, the one we always forget to talk about, because we assigned zero value to it in the acquisition, or near zero, was Hammond Reef. Again, multi-million ounce deposit, permitted. basically pretty much shovel ready. We have to update studies, I'm sure, and take it to the board for permission to build. But at $2,400 Canadian per ounce, if you could get that for the whole mine life, I'm sure that'd be gangbusters as well. So as I said earlier, it's almost an embarrassment of riches. We've got about 10 million ounces of gold in Finland at Kittilä, so we'll be there for decades. Regional potential in Kittilä and all kinds of things going on, including possible small-scale M&A in Mexico. It's really a capital allocation issue where you're not going to build everything. You're not going to drill everything all at once. Finding the right balance, I think, is one of the things that Sean has proven himself over decades as CEO. He's proven to be very, very good at finding that right balance. And so we'll do that. It'll be a balance between higher dividends. It'll be a balance between pushing the pipeline and the exploration forward. Make sure that you keep an eye on the balance sheet because it's a volatile commodity business. And one of the reasons we've been around for 63 years is because we've never taken on too much financial risk. We've never taken on too much political risk. And those things aren't going to change.
Great. Thank you very much. Just one further question. At $1,800 gold, Agnico with a strong second half and moving into 2 million ounces in 2021 is going to be generating a lot of free cash. How would you prioritize debt repayment or strengthening the balance sheet versus dividend versus increasing capital allocation to projects? And how do you look at those priorities now?
That's actually a fairly good loose job description for me, is to really try and help Sean find that right balance on what we can and can't do. But as I said earlier in the conversation, I think it's our job overall to increase the shareholders' exposure to the metal on a per share basis. So that's why I emphasized the self-funding nature right off the top. I think that we are going to accumulate cash here. We're going to have more cash on the balance sheet than we have had in the past. We're going to raise the dividend, obviously up to the board, to the timing and the magnitude of that increase. But it is quite clear from me, from our own internal financial forecasts, that there's tremendous capacity for a higher dividend. Now, our dividend policy is that we want to pay one, number one, and we don't want to reduce it. So in a perfect world, we're going to increase it by the amount that we feel comfortable that we can keep it at that level, arguably forever, until we raise it again. Now, again, 2013, things like that do happen in our industry, and you've got to react somewhat to severe falls in the price of gold like that. But as I said earlier, I think the price of gold in the negative rate environment that's gone all over the world, in the government stimulus environment that is literally all over the world, gold's probably going to do pretty well here. In fact, I know that the gold ETFs are now at all-time record highs, surpassing the 2009 peak. I'm not the least bit surprised by that. Generalist investors that we talk to are doing a lot of homework on gold. I'm sure you've seen that yourself. And there's really, I don't want to jinx it, but there's really no reason not to have some exposure to the metal. It just seems like the right thing to do. I'm obviously heavily biased and a bit of a believer in gold to begin with. But everything is pointing to a more difficult environment. The broad markets are at all-time record highs based off of earnings that have been, punched in the stomach by the virus. So that suggests that equity multiples in the broad market are at all-time record highs as well. And I don't really understand why that would be the case in the long term. I really don't think it will be. I think that'll normalize and drag gold along with it as well. And then much longer term, of course, you get into the inflation conversation, where if the velocity of money ever comes back to more normalized levels, we all know what's happened to the money supply. that suggests that inflation is coming in a big way at some point. And gold does pretty well in that environment as well. So I don't know. Agnico is going to do pretty well. All the gold equities all the producers are going to do pretty well. The juniors are probably going to get their financing windows open. They'll probably do pretty well. It should be a nice problem to have, trying to figure out what to do with all of this money. But as I said earlier, Agnico's probably in the neighborhood of $700 million per year of CapEx. I like to say that that's probably plus or minus 100 million. If we have a lower margin environment, maybe we trim that back to 600 million-ish. Maybe if we have a great margin environment, we boost that up to 800 million-ish, because we do have a great pipeline of projects that we would like to advance. So it's nice to have that flexibility. And I'm really proud to say that Agnico's had that my whole 15 years. It's gone really quite well with very few exceptions. And it absolutely looks like we're going to have tremendous flexibility to run a very strong business going forward from here today.
That's great. Thank you very much for taking the time to present on the Red Cloud platform this afternoon. It's been great to get your insight on the business and where you think it's going and the outlook. And it's great to speak to you again.
Yeah, Andrew, I look forward to when I can say hello, shake your hand, and even sit down and have a meal with you at some point, because that's what I think we're all missing, is that much larger social interaction. I'm holed up here at my cottage south of Parry Sound. Not that I'm suffering, but I really do miss people like you and the rest of the Red Cloud team. So thanks to you guys for setting this up, and it's been great. And thanks to all the attendees. I really appreciate it.
Yeah, and yeah, absolutely. Thank you everybody for attending this webinar this afternoon. And look, I just would highlight that our next webinar is tomorrow at 2 p.m. and it's with a junior producer called Corora, and Paul Hewitt, chairman and CEO, will be presenting. But thanks very much, Dave, for spending time with us this afternoon.
It's really my pleasure. Thank you.
Okay, bye for now.